On today's Business Matters, Walgreens is working on a market climb before exiting and going private. The pharmacy retailer beat Wall Street estimates for quarterly profits, and this is partially the result of a turnaround plan that included closing underperforming stores. Walgreens' retail business has struggled as inflation rose and consumer spending dipped. Also, its pharmacy operation has faced low reimbursement rates for filling prescriptions. As a result, Walgreens agreed to be taken private by Sycamore Partners for $10 billion. This will close out nearly a century of trading on public markets. Walgreens expects the deal to close in the fourth quarter of this year. An audit of Panama Canal ports, owned by a Hong Kong company, says the company violated its contractual obligations. Panama's Comptroller General said he found many breaches of contract, including failing to pay $1.3 billion owed. He said he would file a complaint with the prosecutor's office. The contract with Hong Kong company CK Hutchison would end in 2046, but Panama's Maritime Authority has the power to end the contract early. This could further the stalled sale of the ports to U.S. firm BlackRock. The Trump administration sees control of the ports as a crucial national security issue. Defense Secretary Pete Hegseth is visiting the Panama Canal today. He is the first defense secretary to visit in decades. And new safeguards for teens on social media. Meta platforms will no longer allow users under 16 to live stream on Instagram without parental consent. These users will also need permission to turn off a feature that blurs images with suspected nudity that are sent through direct messages. The new safety measures will be rolled out first in the US, Britain, Canada, and Australia. Meta said it's also extending safeguards for users under 18 on Facebook and Messenger as well. This includes teen accounts set to private by default, blocking private messages from strangers and reminders after an hour to get off the app. A shield from the full force of tariffs, Walmart's membership program may be its key to growth amid uncertain economic times. The retailer's chief growth officer described Walmart Plus as a frequency driver. Compared to regular customers, Walmart Plus members on average shop twice as much and spend nearly 3 times as much. He explained that as Walmart Plus grows, higher profits will allow the company to keep prices low and to invest. The company can also benefit from using shopping insights for advertising and inventory. Walmart is not immune to the impact of tariffs, but a retail analyst at Barclays said the retailer should be better positioned, partially because it's the nation's largest grocer. The analyst explained that even when shoppers pull back on other spending, grocery sales help businesses to remain steady at Walmart. Also, Walmart is able to attract upper and middle income shoppers looking for deals since it is a well-known value retailer. Walmart will be leaning on its membership program after the big box retailer disappointed Wall Street with its outlook for the year. The forecast was announced ahead of President Trump's broad tariff expansion. Walmart launched Walmart Plus 5 years ago to compete against retail rival Amazon. A boost for the health sector. The federal government has announced better than expected payment increases for Medicare Advantage plans next year. Medicare is federal health insurance for people 65 or older and some people under 65 with certain disabilities. While Medicare Advantage plans are privately run versions of the government-funded program, the Centers for Medicare and Medicaid Services said rates are expected to increase more than 5%. One analyst described the updated rates as well above expectations. The CMS agency says the rate increase is expected to cost taxpayers an additional $25 billion next year. Employees at e-commerce company Shopify are now expected to demonstrate that AI can't perform a particular task before they hire someone to do it. The CEO posted his internal company memo on X. NTD Shar Marshall has the details.
To get ahead of possible controversy, Shopify CEO Toby Lutke publicly released an internal memo to his employees. It states that the ability to use reflexive AI is now a baseline expectation at Shopify, and that staffers need to prove that jobs can't be done by AI before asking for additional headcount. which would effectively freeze hiring new workers or adding more workers to projects unless it could prove to be demonstrated that AI can't already do the job. Lutke said he released the memo because it was in the process of being leaked. Tech companies have been rapidly reducing staff and looking for ways to be more efficient since around the time large language model chatbots began gaining popularity. According to layoffs.fyi, 2024 saw around 152,000 roles terminated throughout 549 tech companies. Here's a quote from Lutke's X post that shows the level of pressure on Shopify staff. In a company growing 20 to 40% year over year, you must improve by at least that every year just to re-qualify. This goes for me as well as everyone else. There are strong responses on both sides. AI people are all for it, while others see the memo as extreme. But several commenters on TheVerge.com also wondered whether the company could use AI to replace its own CEO. Sean Marshall, NTD News.
Congestion pricing in New York City will remain in effect, at least for now. The controversial tolling program charges most drivers a $9 toll to enter Manhattan's main business district during peak traffic times. The program was designed to raise millions of dollars for infrastructure upgrades. President Trump promised to end the toll soon after taking office, claiming it's harmful to the city's economy. State transit officials sued the federal government over its effort to stop the toll. According to a new court filing, officials have agreed to allow the congestion pricing to stay in place until at least late July to give the judge on the case more time to consider the motions. And the federal government does not currently plan to seek an injunction. Meanwhile, a federal judge in Texas struck down a controversial Biden administration nursing home staffing rule yesterday. The mandate would have required nursing homes to meet a minimum staffing number. The rule was finalized last April, but it was quickly challenged in court by nursing home operators and their trade associations. They said nursing homes already struggle to fill open positions. The industry trade group said the mandate would have required more than 100,000 new hires at an annual cost of nearly $7 billion. The judge ruled that regulation must be consistent with congressional legislation that oversees nursing homes. Triple digits in tariffs are set to take effect tomorrow on China. The White House is charging ahead with another round of retaliatory tariffs. This is in response to China not withdrawing its retaliatory tariffs. China was already set to see tariffs increase tomorrow, but President Trump threatened to tack on another 50% if Beijing didn't back off its promise to impose counter tariffs on U.S. goods. This means in total, all goods from China are subject to tariffs of at least 104%. The tariffs are set to take effect at midnight. So President Trump vowing to impose additional 50% tariffs on Chinese imports, and that's if Beijing does not withdraw its tariffs on American goods. And China said it would fight to the end and take countermeasures against the U.S. Earlier, I spoke to Richard Stern, Director of Budget Policy at the Heritage Foundation and a former budget advisor to House Speaker Mike Johnson. Take a look. I got to ask you, do you think China has the cards to engage in a tariff standoff with the United States?
Well, good morning to you, and I do not think that they have the cards whatsoever. If you look under the hood, the Chinese economy is based on central planning. A full third of businesses in China are underwater in terms of profitability. Their economy is stagnating. The Chinese economy is finally coming to grips with the fact that they've had over a decade of tyrannical rule from Xi Jinping, from the Communist Party, tightening its grip over every aspect of Chinese life. And so I think absolutely not. They are in no position of leverage against the United States and our global trade partners and allies.
What about the impact on Americans? If Trump indeed implements his new tariffs on Chinese products, it could reach a combined 104% on products imported into the U.S. from China. What's the impact on the consumer?
Well, I think the important thing to see here is actually, oddly enough, the high water mark as a percentage of our economy of Chinese goods imports was 10 years ago. It was actually in 2014 and 2015. And so the economy, the U.S. economy, in fact, the global economy in some respects, has been steadily decoupling from China as it's become apparent how bad the government is there, how bad the economic policies are, and how unreliable the environment is there. So don't get me wrong, it's not that there wouldn't be zero impact on US producers and consumers, but at the end of the day, being exposed to the Chinese market, relying on the Chinese market is a much more dangerous threat. And not to mention, of course, that the Chinese government is dumping products like solar panels that don't work very well, like EVs that can track your movements and your data into the US market. So overall, that kind of decoupling, finally playing hardball with the Chinese Communist Party, is an essential must for the long term viability of the US and US consumers and producers.
You know, I'm a little bit worried here. We could be on the doorstep of a full-blown trade war between the U.S. and China. I mean, it seems that way, that China is not going to back down. It says it's going to fight to the end, right? We just reported on that earlier. What happens if neither side backs down? China imposes retaliatory tariffs, and the U.S. imposes more retaliatory tariffs. What's the end game here?
Well, again, what I would say is, in some respects, this is just speeding up a process that has already been quietly going on for a decade. And again, what I would say is, look, there's some harm that might be done that you can see, but there's an enormous amount of harm that is being done right now because of the unfettered regime we have with the Chinese. I mean, keep in mind, the Chinese Communist Party steals our IP, they steal our data, they are buying things, land and equities in the US so that they can influence policies here, so that they can threaten the American public. And so, in some respects, you can view it as trading off the costs. But it's a mistake to say that right now there's no cost to the way that we do business with the Chinese Communist Party. So, look, I share your concern. Nobody wants to see an all-out trade war, but we do need to change something about our relationship with the Chinese Communist Party. And I think Trump is taking a proper, measured, and hard-nosed approach to doing so.
All right, Richard, that's our time today. Thank you very much.
Thank you, as always.
On a lighter note, Cinnabon is turning 40 and is hoping for a rejuvenation among consumers. The mall food court stable is teaming up with Carvel, opening up a new location that will serve up desserts featuring cinnamon rolls and ice cream. The menu at Cinnabon Swirl is designed for the social media audience. It includes items like an ice cream sandwich served with Cinnabon-inspired cookies and Carvel-influenced toppings. Cinnabon and Carvel share the same parent company. The first Cinnabon Swirl opens in May in Oregon, with another 3 opening in other states by the end of the year. An additional 30 locations are set to open next year. And today is Free Cone Day at Ben & Jerry's. You can head over to any Ben & Jerry's scoop shop for a cone and a free scoop of ice cream. The free scoops will be given out between 12 p.m. and 8 p.m. The company has a quiz on its website to help match consumers with a suitable flavor for Free Cone Day. The Vermont-based company has been holding the annual giveaway since 1979, a year after the company began serving ice cream at a renovated Vermont gas station. Ben & Jerry says it's a way to say thank you to fans. Dessert franchise Crumble is partnering with the Kardashian-Jenner family for a menu takeover. It's offering 6 sweets in their honor through April 12th. Courtney's flourless chocolate cake is gluten-friendly. Other options include Chris's classic yellow layer cake, Kim's snickerdoodle crumb cake cookie, Kylie's pink confetti sugar cookie, and more. And there's roughly a week left to file your taxes, and if you haven't started the process yet, here are some tips for late filers.
Time is running out to file your 2024 taxes on time. You have until 11:59 p.m. in your time zone on April 15th to send your federal taxes to the IRS. But experts say the sooner you start, the better, because it can take a lot of time to complete.
I've seen some people take up to 30 hours just because the understanding of the tax law is confusing.
Travis Belton is a tax accountant. He says you can file for an extension, but warns there may be fees.
There is a penalty for underpayments if you have an over an amount of $1,000 or more. It's called an underpayment penalty.
If you owe more taxes than you can afford, you can apply for a payment plan through the IRS's website. But the IRS recommends you pay as much as possible before doing that.
Installment agreements are usually supposed to be up to 18 months and can be split out over time.
According to the IRS, the penalty to file late is 5% per month on the unpaid balance. But if you work with the IRS and pay at least some of what is owed, you can minimize the late payment penalties. Be warned, the interest rate is 7% per year.
It's encouraged to pay as soon as you can in order to avoid additional penalties and interest or consequences.
Filing your taxes will take longer for anyone who's had a life-changing event in 2024, like getting married or having a child.
Okay, on to Wall Street. S&P 500 closed below the 5,000 mark for the first time in nearly a year. And this is following a volatile session and a fading rally. The market drop was exacerbated by concerns about the negative impact of tariffs on earnings. And that's particularly with the start of earnings season. Investors are also concerned that tariffs could fuel inflation and harm global growth, which has led to speculation about potential interest rate cuts by the Federal Reserve. The San Francisco Federal Reserve president, however, stated that the economy remains strong and the Fed should not rush to adjust interest rates. And that's it on Business Matters.